welcome to ShareTreck. Today is the 7th of January 2022 and it's around 2 o'clock in the afternoon. Behind me is the VXN. Let's look at some of the other positive things. As I promised, right, during these tough times we have to look at good news in order to motivate ourselves. So I have got a few nuggets for you. So let me present them here. So the first piece of information, this is not news, this happened in 2019. So the lady you are seeing there is NASA astronaut Christina Koch, and she used CRISPR to generate and repair DNA breaks in yeast cells in microgravity. So the picture is courtesy of NASA. So that was something that happened in 2019, and the reports are that it was successful use of CRISPR in space. So that is one good news that I can share with you. Scientists develop means to boost the power of CRISPR. The capability to edit genes has been transformative in opening therapeutics avenue for untreatable diseases and aiding biological insight. Scientists have now discovered a way to enhance the process using retrons, making the process more efficient and effective. So this is about being very precise in doing the editing. So if you read ahead further, it says the key gene editing technology CRISPR-Cas9 was discovered in 2012. We know that. Facilitating alteration of DNA sequences in live cells. The process involves removing a section of DNA from a cell's genome, then introducing new genetic material to the cell called the template DNA to replace it. As the cell repairs the cut sections, the template DNA becomes integrated in the genetic sequence. So we already knew that. So what is new? The DNA cutting mechanism, Cas9 protein, and the template DNA are produced externally and introduced separately to the cells. However, it is not possible to ensure that both elements penetrate every cell, and therefore it limits the efficiency of the process. So what Gladstone Institute has done is that their scientists have been able to use something called as retrons to fine-tune this gene editing process and make it more effective, by which I understand that it's able to permeate most of the cells and way better than what CRISPR-Cas9 alone could have done. So that's again another positive development, and this is fresh off the press. Like I just got this information this morning. The article is dated 7th of January 2022. So that's what we have there. So having given you a bit of motivation, and to myself also, let's look at the real life situation in the market, which is not that good, but fortunately for us, our resistance is still holding. If you can see the VXN below me, it's exactly at 26.08. I have a delayed feed of the VXN. It's around 2 o'clock right now. So maybe I'm delayed by 5 minutes or 10 minutes, something like that on my platform. But so far so good. I would be happy if we can end the day below this resistance level on the VXN. And if we take a look at the Nasdaq, we'll see that the Nasdaq has also been falling. It has dropped minus 0.67%. Again, it is still managing to stay above the support of 14954.18. And if you look at the MACD, it is totally bearish. Momentum is very low. So it's not looking that great. And I would be really grateful if for the next 2 hours we stay above the support line and close the day above the support, and we live to fight another day. So having said that, let's take a look at our shares here, the biotech shares. So in terms of the biotech shares, we have, let me sort this out first so that we take the best before the rest. So Editas is doing very well today, followed by Pfizer, NTLA, Novartis, Teladoc, Regeneron, Vertex. The rest, CRISPR, ArcG, Blue, and Beam are suffering. And Beam is the worst performer today with a loss of minus 1.97, closely followed by Bluebird. So let's look at the chart for Editas. And this is a long-term chart with every candle being 1 day. So you could see that yesterday we had a doji candle and we went below the current support line, which is at 24.36, and then we jumped back up and we ended exactly out there. So today the support line seems to be helping us, but the bears are still able to push the bulls down. So you have seen an inverted hammer out here, and that's not a good sign. I would prefer any day the upward hammer where the hammer head is on the top instead of being at the bottom. So I'm keeping my fingers crossed on this. I hope that the MACD, which is bearish right now, would be able to cross over the signal line. The RSI, though it is weak, it's pointing upwards, so I'm hoping that the momentum is starting to pick up a bit, and we are already positive at 2.27%, so hoping for the best out here. And if we zoom out, let me go to a 1-year view. If we zoom out, we will see that we are still firmly inside this bearish channel, so we are still going down. My hope is that if I were to extend the upper bounds, my hope is that if we were to come horizontally all the way here and then break up from here, then it would be better. Anyway, I'm thankful I can take whatever is available right now and stay above the support line at 24.36. So having said that, let's go on to PFE. Pfizer is up 1.34%, 0.73 cents. It's been going up and down, in the last so many days, moving sideways. Overall, I think I'm comfortable with Pfizer. It's above the support line, which is at 53.50, and the next resistance for Pfizer, which it has to go above, is 56.22. The MACD is absolutely bearish. The momentum is average. It's looking up. So hoping for something good to happen when we get the earnings, which is going to happen on 8th of February. And we have the dividend coming up, which is 40 cents on 27th of January. So these are two positive catalysts for the lack of anything better. Let's go on next to NTLA. So in case of NTLA, we are up 1.23%, that is $1.29, and we are still struggling to break through the resistance at 108.01. We went up sharply and then we came down. Again, bears are in control of this market right now for this share. And if you see the hammerhead, which is inverted for that candle, that shows that the bears are still having the upper hand. Our MACD is bearish, and our RSI is looking up, sentiment is looking up, but it's very low. The momentum is low right now, but given the direction it's heading, I hope that it picks up. Dark pool sentiment is positive, and we are still positive on NTLA. Let's go for Novartis. Novartis is down. Novartis is up 1.12%. That's around 99 cents, and we are above our support of 88.41, and we have a resistance which we are knocking at 89.29. So we are exactly at our resistance and trying to break through. So if we go to a 1-day view, we will see that this is the resistance line, this red line out here, and we have been spinning around it like a snake coiling around a pole. So we just hope and pray that it can stay above. When I look at the MACD for clues, I can see that the MACD is also a bit mixed. It was bearish and then it became bullish, and now it is trying to cross over to the bearish side. The momentum is also down. It was up earlier, so it's a mixed bag out here. So it could go either ways, and just now as we were speaking, we have seen this huge drop out here down to 89.27. So things are not looking that great, and I would be grateful if we could end in the positive for the day, because we still have 2 more hours to go. Let's look at Teladoc. Teladoc is up 0.81%, and we have a very bearish MACD, and our RSI is oversold, so it's over time for it to bounce back up, there is no information on the dark pools, so there is no activity out there potentially. So it's all looking bearish right now, even though we have a positive. Let me zoom out to a 6-month view. If I look at the 6-month view, we can see that we have a support at 78.36, and our resistance is at 84.91, and yeah, we have to hope that we stay above the support, and we at least touch the resistance once today. Next, let's look at REGN. So in case of REGN, we are testing the resistance at 605.81. We are already up $4.17, that is around 0.70%, and our support is sitting at 594.13. So it's looking good for REGN right now, especially because the MACD is crossing over to the bullish side, and the momentum is not looking great. I would have been happier if the momentum was pointing upwards, showing that there's a pickup in momentum, but there is plenty of ways for it to pick up before it becomes overbought. Dark pool sentiment seems to be positive. So if I zoom out to a 6-month view, we can see that we broke down from the bullish channel, and now we are going down step by step. The main test for us would be to remain above the support level of 594.20. Let's go on to Vertex. When it comes to Vertex, we are above our support, which is at 220.15. Our resistance is going to be at 224.46, and if I go to a 1-day view, we can see that we are way below the resistance, and we have this green line which is coming from here. This is also a form of resistance, because if you zoom out, you will see that previously all the moves of this share were contained by this diagonal line, which we broke down from. So now it is acting as a resistance, so it will also act as a resistance up here. So when we come closer to crossing this horizontal resistance, which is at 224.46, it's going to be slightly tougher, because this diagonal will also be intersecting somewhere out there. So that is something we need to be wary about. MACD is tending towards being bullish. RSI is pretty decent. So I hope we continue to maintain this positive momentum and end the day. So this has to hold on for another 2 hours. So next, let us go on to CRISPR. So when it comes to CRISPR, the only thing that I can see here is that we have a support at 66.36, and we want to stay above that. The MACD is kind of going towards the signal line, which is not a good sign. Dark pool activity is also negative, and RSI is getting weaker by the minute. So I'm thinking that the best case scenario for us today would be to stay above the support of 66.36. If that happens, I would be happy. We are already in the negative, so it'll mean a further drop of almost maybe $1 or so. So not a good sign, but that's what it is. Let's go on to ARCG. ARCG is having a really terrible time, and I wouldn't like to be in Cathy Wood's shoes, because it's going to be pretty hot out there, and I hope she gets the necessary motivation to stay the course. As you had seen in my special video yesterday, if you have not seen that, please just go and have a look. I have explained very clearly what the traditional economics dictates at this point of time, that what would happen and what Cathy Woods is talking about, and trying to give you an idea of why the market is so volatile and why the market participants are confused and not able to decide whether to go up or down, and that's the reason why the indices are going down. So have a look at that video. I just dropped it last night. I made a special for you guys, so check that out. I hope that ARCG can stay above this support line, which is at 54.06. MACD is looking bullish, though it may potentially cross over the signal line. RSI is very weak, and dark pool activity is negative. So that's what we have for ARCG. Bluebird is down minus 1.84. It did well yesterday. It has come down today. It's like a yo-yo, as I mentioned. And nothing is driving these markets. It's all the volatility. There is no reason for anything to go up or come down. It's just things are moving here and there, while people get confused with which approach to take and what's happening with the market and what's happening with the data. So as far as blue is concerned, all the indicators are negative, and our next support is going to be at 9.40. We are broken below the previous support of 9.76, so I'm going to turn this into red as a resistance. And let's look at beam. Beam is at 69.35, that is down 2.20%, and we have fallen below our support of 70.08, so I'm going to mark it red, and I'll plot out the next resistance after this video session is over. So that brings me to an end of the technical analysis section today. I would like to take a few moments to talk to you about the job reports, and if you are interested, you can stay back and look at my interpretation of the jobs report and how it is impacting the share prices. So here is the employment status that was released in the report as on December 2021. So we got 4 categories here: non-farm payroll, private payrolls, manufacturing payrolls, and unemployment rate. So these are the 4 categories of statistics that we have. So in terms of non-farm payroll, in the prior period, comparative period, it was 249,000, and the estimate was for 400K, and we got 199K. So not only did we not meet the estimate, we are less than half of the estimate, but also we have done worse than the prior. Likewise, unemployment rate, which was supposed to be at around 4.2 in the prior period, comparable, the estimate was 4.10% for this period. We are down 0.20% at 3.9. So a lowering unemployment rate is really a good thing to have, but the question is, whether it is because the participation of people eligible to be employed has dropped, or is it because there is a full employment scenario? If it's a full employment scenario and most of people who want to work and can work have already got a job, and that's the reason why the unemployment rate is down to 3.9, then that means the market is, the economy is really hot, which means it is inflationary, and that also adds fuel to the interest rate hike bandwagon. So that's what I think about that. And when it comes to private payrolls, that is the private sector, prior period they had 270K, and the estimate was 365K for this time around, and we have at 211K for the recording period. So there also we are below not only the prior but also the estimate. So it's possible that due to pandemic and due to the lockdown, a lot of hospitality industry, restaurants, entertainment, and all those kind of establishments were under severe stress, and many might have closed off, and therefore the employment out there has dropped and the payroll numbers have dropped. But then our unemployment rate should have been higher, but the unemployment rate has gone down. So it's a very confusing to me, but I'm going to try to interpret it as best as I can. And I have the raw data for you to see, and you can make your own assumption and put it in the comment below what you think is happening here. So in terms of manufacturing payroll, they were expecting 35K as an estimate, and the prior was also 35K, but we got 26K, which is 9K below. And that's a very huge disparity. So yeah, it's a mixed bag. I don't know what to make of it, because we also hear news reports of people not wanting to work because they have some epiphany and they have had some revelation during the COVID lockdown about what they want from their life, and they don't want to get back into the 9-to-5 grind and the rat race, and they want to do something on their own and so on. On the other hand, we also hear about employers complaining that they don't have enough qualified people, and along with that we have a lot of commentary that employers are just not willing to pay adequately, and that's the reason why they are not getting the people. If they were able to pay better wages, and they will have all the people that they need. So all of these kind of information is swirling around in the media, and we don't know what is true. And this is also part of the reason why the volatility is still intact, because if the unemployment rate is low, and if you assume that it is low because everyone who wants to work and can work has been employed and very few are left to be employed, then it is bullish signal for the economy. It means things are heating up in the economy, and the solution for that is to raise the interest rates. However, if you look at the private payroll shrinking, the manufacturing payroll shrinking, and the non-farm payroll shrinking, then you would probably think that there are a lot of people who are unemployed. But contrary to that, the unemployment rate says 3.9%, which is lower than what is expected, and it is lower than prior. So it depends on how you look at it. So please put your own assessment on the comments below, and maybe we can have a discussion about that. But this is what I feel. I don't know what to make out of this. It's very confusing. Therefore, I'll attribute that to contributing to all the volatility in the market, and therefore the the market is going down. So as usual, again, these are my personal opinions and not financial advice. Please do your own due diligence before making any investment decisions. Please like, share, and subscribe. We have crossed our 50 subscriber numbers. So thank you to the entire community. Thanks for supporting this channel. Thanks for all your likes. And we'll see you soon. Take care. Bye for now.